Hello friends, welcome back, and we are going to continue with the Creditors account over here. So Creditors account, if you remember well about what I told you for Debtors account, it is simply the replica but on the opposite side, because Creditors is going to be what? It's a liability. You have to make payment to someone. That is how you maintain your Creditors account. So that is the reason why your opening balance will come on the credit side. You can see over here, by balance brought down opening balance, and then you make some credit purchases, and obviously when you made some purchases, you will either pay them by cash, you will pay them by bank or check, and then you have certain discounts which is received, and you have some purchase returns. Like over there we had bills receivable, here you will have bills payable, that is the bills accepted, and then you are going to have your bills payable which is going to be dishonored. Same concept as debtors, so I need not elaborate because I have spent more time over there explaining each of the concepts. This is just the opposite. There it was sales, here it is purchase. So you have the closing balance over here, and so most of the time this will be the requirement. You have to find the credit purchases. Okay, this you have to find the balancing figure of credit purchases. So that is the reason why you have to prepare the creditors account. So again, I'll repeat very quickly. You have the opening balances, you have a credit purchases, which should be mostly the balancing figure. Then against this credit purchase only, you make cash payments. Okay, you make cash payment, you make check payment, you get discount, you will have purchase returns. Then you have bills payables, which are the accepted bills, and those bills might be dishonored. So bills payable dishonored. Yes, very clear. And the closing balance. So we'll quickly do one problem so that we can go ahead further. So creditors opening balance they have given 50,000, returns outward 6,000, cash paid to creditors 1,60,000, creditors on 31st March 70,000. So now you can see the entire creditors account can be prepared with this information. So the requirement is to find the credit purchases. So we'll open the creditors account. On the debit side, we'll write to cash, return outwards, and the closing balance of 70,000. Then on the credit side, you have the opening balance of 50,000, and you arrive at the balancing figure, that is your credit purchases, which will be 1,86,000. How do you come to know it is 1,86,000? Simply the total of the debit was how much? 160 plus 6 plus 70, that is 2,36,000 minus 50,000. So you arrive at the balancing figure as 1,86,000. Yes. So same concept, we'll apply the opposite of bills receivable. You are going to have bills payable account. Here again, you will have a credit side, you will have the opening balance because it's a liability. Okay, and then we have any payments which is made, so we'll write to cash or to bank, and then any bills accepted, you'll write by sundry creditors, and dishonored, you'll write to sundry creditors, bills payable dishonored, and the closing balance. So literally, when you are going to find the total purchases, requirement is there, you simply find the credit purchases and you add cash purchases and you arrive at the total purchases. So that is the purpose why we are doing this, because these are all incomplete accounts, and whatever information is available, with that information we have to prepare the accounts. So we have to prepare the sales, we have to prepare the purchases, and then prepare the balance sheet. So let's go ahead with this illustration. They have given the sundry creditors, bills payable, paid cash to creditors, paid for bills payable, purchase returns, cash purchases, creditors, and bills payable. So simply we'll maintain this bills payable account. We'll have the opening balance. Then we have cash, that is for which the bills has been paid, 1 lakh. Closing balance 80,000 is there. That means you arrive at the sundry creditors, which is 1,20,000. That is the bills accepted during the year. So then, so what happens? We transfer that figure to the total creditors account and to bills payable, and you have whatever cash was paid for creditors, purchase returns, all those things will come on the debit side and the closing balance. And on the credit side, you can see you have the opening balance. So from 1,55,000, you remove the opening balance 75,000, you arrive at the balancing figure, which is 4,80,000. That will be the credit purchases. So the question was actually to find the total purchases. So they have given in the question 3,20,000 is the cash purchase, and you arrive at the credit purchases which is 4 lakh 80. That means your total purchase is going to be 8 lakh rupees.